Welcome, this is Mike Hamilton for Trade the Easy Way, and for the free video I'm just going to look at the pound and the Dow, and you can see that we are clearly in another phase of the 2015 bear market. Here was the distribution pattern through the early part of 2015, then the dramatic drop, then the waves to the upside until we got back to an area of resistance, and we began to roll over, and now we have since rolled. So distribution pattern up here, very similar to these patterns up here, and this is going to be the theme of the rest of 2015 and 2016, I believe. And so I think we will just inch down, possibly see one or two dramatic moves down to the downside. I said I created a video in the summer, and I said on the tag to that, you're welcome to the 2015 bear market. And this is typically how bear markets perform. They don't just go straight down, a little bit up, and then straight down. Bear markets take time, like any bear market. They take time to work up and down. So this is the level I've pinned for a pullback. We had a big sell here and then pulled right the way up. That's possible. On Monday, if we close back up here, then this could see us recover into that area there. My advice to you, my suggestion to you, is keep shorting until it stops working. So I will be looking to short this area here to see if we can come down to this major support area here, which is around about 16.8, 1700. But the entry point that I'm pinpointing, and you might want to look at, is 320, 350, 320. As for data, what could possibly shake this market around? We've got UK and US inflation on Tuesday, and then FOMC minutes on Wednesday. So the market is going to be looking for any indication that rates are on the way up. And I think basically the Fed have missed opportunity here. If I was the Fed, I'd be looking at these markets, and I'd be looking to rate rise into these rallies to try and soften the blow and not catch the market when it's already ebbing down like this. I think this is much tougher for the Fed to raise rates in this kind of environment where we have seen such sharp drops and pullbacks are getting sold into. But I think the Fed have got to do it. There's a lot stacking against it because one of the main concerns is not so much what's going on in the US. One of the main concerns is what's happening in emerging markets. Emerging markets are very exposed to US rate rises because they have benefited on cheap debt, on the lower dollar with quantitative easing, and now that's all over and we're threatened with a rate rise. The emerging market bond market has seen a lot of exodus, which has meant the yields on their bonds have shot up and their borrowing costs have gone up. So that's the main issue. It's got a lot to do with what's going on in the emerging markets and less to what's going on in the US market. At least that's so far what I think the decisions have been based on. And that is a dangerous cocktail because the US has long since needed a rate rise in my books to safeguard future levels of inflation, wage inflation and general inflation. So cut a long story short, let's make sure that you're pulling back and trading the trend and not looking for, certainly I don't think anybody would look for any bottoms in this on 2 days heavy selling like that, but just take it easy, because now anybody who's getting in short now is getting in after a lot of heavy selling already. So the last thing you want to do is steam in there, fill your boots up, only for this to bounce off of this fib level. Alright, but the fact we close above the 50 or the 200, we're getting a golden cross to the downside. Alright, now let's move to the pound pairs. So I've taken fibs away on this pound US dollar on the basis that it's become a little hard to call. We had 2 days of heavy selling on the back of UK rate decision and non-farm payroll last week, and all we've done is we've pulled back into this selling. We've closed above the 8, we've not closed above the 20. So this area here that I've identified, 153.22, is a key area, because if we knock into that and reject it, then watch out, because we could be inching down here. And obviously Tuesday is going to show us some early indications, and Wednesday should be conclusive one way or the other. What do I think is going to happen? I do think, as I say, I do think we're going to knock into that resistance level. The 2015 mean price, we've seen come underneath this, we come above this, a bit of a pullback, then we drop down again, and you can just see we're just looping in what is effectively a big box play. And I think the box has got a while to play out unless the US do raise rates here. In a box play like this, I'm interested in how the top sell, to see if this is going to be a short one. I'm interested in how this top sell, and we've got a series of lower highs here, so it suggests to me that there is more selling pressure than there is buying pressure. So an ideal place to get short, if that's the case, is this median line, unless of course it goes above it. So stay tuned for that. I'm just going to let the week begin to unfold and then see where we are. Alright, in the premium video we are looking at the other pairs, particularly some commodity related pairs. Alright, and I've got some interesting setups and chart patterns in that. Enjoy the rest of your weekend, and if you would like a trial, you take a trial of the trading room. See what we get up to, see how we mark our charts up, see how we use certain types of pivots in the market, and see if you like it. Alright, like I said, bye for now, enjoy the rest of your weekend, and see you at the next update.